flat at the index level. So let's get you some market opinion that we got earlier today on the longer term picture for the market. Nilesh Shah, the MD and CEO of Envision Capital, tells us what he makes of the market. Can it rise from here on? What his sectoral calls are. Listen in.
Rallies and dips are all part and parcel of this journey. I think what has happened, the most important of all, is that I think a fortnight back there were two concerns. One is what happens post-May, in the sense, do we get a stable, strong government, or is it going to be one more kind of a coalition? So there was some kind of concerns on the political front, and then of course the other concern was on the geopolitical front, that will this escalate further? Thankfully it has not. So I clearly think that both these apprehensions have been put to rest. And then, of course, third, aspect is that globally there's been a rally. I think April, May will be very critical. Of course, yes, the election outcome is going to be important. But I think along with that, is there now a renewed confidence in corporate India that earnings can get into the double-digit zone or not? And I think that's going to be very, very important. Homes 500 square feet and less, okay? There's virtually no capital gains, okay? Interest rates are virtually at all-time low. Subsidies are virtually at an all-time high. There is no property tax. Okay, it's probably no better time, and prices have not gone anywhere for almost 5 years now. Okay, the big issue is, of course, affordability. That do a large mass of people have the affordability to even check into affordable housing or not? But otherwise, this is probably the best time for that. So clearly, and then of course, with all some of the big benefits of RERA, etc., having come in about a couple of years back, I clearly believe that I think the outlook over the medium term for quality, affordable housing players, I think, is fantastic. Our view is that I think the four-wheeler space, the passenger car segment, still looks stressed. Okay, we've had almost now 7 months of no growth or decline. There is Uberization which is happening, public transport is picking up. Most of our urban cities and metros will now have a metro network. Maybe in the next 3-4 years, virtually the top 15-20 cities of India will have metros. So I think there are some challenges, that segment. Versus that, I think the two-wheeler is a better play out there.
All right, that was Nilesh with a couple of thoughts on the sectors that he likes in the market. Speaking of sectors, off late we've seen brokerages turn a little optimistic on real estate. In fact, Morgan Stanley and CLSA have turned bullish on the sector. To discuss this and, of course, the big change in terms of taxation, GST without input tax credit, this entire new regime that's kicking in, the impact that it's going to have on companies. We have with us Irfan Razack, Chairman and Managing Director of Prestige Estates, joining in. Good afternoon, Mr. Razack. Great to have you on the show. Thank you for joining in. Now, first things first, before I get to some of the points that I just raised, a separate development that impacts your sector is the rise in cement prices. We understand that companies in the south have hiked prices by quite some amount. What is the average increase for you? And in terms of just, the dynamics, working dynamics, is that a bit of a niggling worry, or will you have the elasticity to entirely pass this on?
Yeah, I mean, can't pass on the cost because we have sold at fixed prices. So any increase in any input, whether it's cement or any other things like even steel or contractors or labor, or for that matter, even now the input tax credit, the company has to take the blow. So that is a business risk, I would say. And that's something that I only wish and I hope my customers appreciate that, and they are a little more benevolent towards us.
Mr. Razack, just to take the point forward about the input tax credit and the blow it is for the real estate company, what is the quantum of the input tax credit which remains unutilized at the company level for you? And therefore, what is the impact on your balance sheet?
No, I mean, it's a little too early to just give
any
you a
rough
bland
estimates?
number of what's the total input tax credit that is available. I mean, I wouldn't guess just now. We are working out the numbers, and we are also waiting for the transition policy to understand what exactly the credit that is remaining, which is unutilized, how it's going to be handled, and what the policy is. We are waiting. I think today there's supposed to be some meeting on that, or on the 19th there's a meeting very soon. So always when there's a transition or there's a change in law, there's always be some disruption, and we need to wait and watch. And ultimately, we need to see how it's going to impact us, how we can mitigate that risk and how we can take it forward. The only silver lining and the only plus that I can talk about is that starting for new sales from April 1st, our customer is the biggest beneficiary, and they will be paying only 5% GST and 1% GST depending on what type of housing they buy. And the customer's cost does go down, and that will help them substantially. But that's only for new sales. As far as the current sales, wherever sales have happened, wherever the bills have been raised, and wherever, as per agreements, bills have to be raised in this month, they will not benefit in any way. But going forward for new customers, new sales that happen, but what will happen is, since our costs are going up, the market forces will decide on the pricing and things like that. It's a common sense thing that when cost goes up, so we need to re-look at our retail pricing and then work it out. And of course, the market dynamics will work, and it's difficult for us to predict that just now.
But are you confident of a transition policy? Because right now what we understand is that the unutilized ITC or input tax credit will lapse on the 31st of March.
No, I don't want to do any guesstimates. Let's wait for the transition policy, which is going to get announced in about a few days from now. And I'm sure the government also will make some sensible decisions, because ultimately it's a survival of everybody. And it's, I mean, if there's no sense in killing an industry that is providing a huge amount of jobs, contributing to the GDP, and also building homes for the people who need them. And I believe it has to be looked at in a very balanced manner. And there's no question of taking advantage of a policy or take a disadvantage. It needs to be equitable and just, and it shouldn't lead to any litigations.
Okay, Mr. Razak, so that's on GST and the new regime. Now, I'm going to go back to the cement issue just to understand this. Now, while I take your point, obviously, I mean, prices cannot be hiked for units that have already been sold. But for new sales that happen, do you have the flexibility to at least cover this higher input cost? And how much is the average increase? For a company like yourself, the blended cost because of the cement increase would be, I mean, a rough percentage, 7-8%, or more than that, less than that?
No, we have to relook at the pricing, obviously, but then again, as I said, it's the market forces. In case, it's also affordability and whether my customer can afford to buy the product at that particular price. So we need to do this gradually. We can't do it in one jump, in one go. But at the same time, obviously, when the costs go up, the overall price will go up and must go up. But how and when and in what volume is to be decided as we go along. Ultimately, if you see all the listed companies today, their PAT margins are in single digit. We are not making any huge margins, huge profits across the board. Last 2 years, if you look at it, every single listed company, I'm glad that we've got listed company in this space. So there's a lot more transparency. And you look at our margins, they are in that single digit, 8, 9, high single digit numbers. PAT margins, and that shows that we are also not working with very huge and hefty margins.
Can you protect margins? Because I mean, I take your point. I think it's very clear that price elasticity might not exist in the market, and I understand that. In that case, are we expecting some sort of a margin impact in the fourth quarter? Maybe 50 basis points, plus minus.
You won't see it in this quarter, but you'll have to see it over. And of course, now we are in that Ind IS 45 regime, because we have to account our profits all on a completed basis. So it will be looked at holistically for the entire project once it's completed. So we have to be resilient. We have to be, sensible enough and balance both, balance the customer, balance the market, and also see that our balance sheet also doesn't get impacted. And I believe that it's possible, that it's not impossible. We should protect the margins. And at the same time, we can't get greedy. If you want turnover, if you want volumes, we need to see that we keep offering a good product at a good price and keep our customers happy.
Just, trying to put a number on this. So on a blended basis, what is the increase in cost for you in the raw materials?
See, now with input tax credit going away, I would say our cost goes up on cost straight away by 18%. On cost, that is only on the construction portion, because there's also a land component. So if you look at it on a blended thing, if you take construction, land, everything, I would say our cost would go up anyway in the region of about 7%.
Okay. Let me come to the volumes then. Yesterday we had from Knight Frank, we had Mr. Ghulam Zia, and he said that at least in the last few weeks, it appears that the footfalls have increased quite a bit. It's too early right now to say whether that will translate into actual sales, but the indications are that there is a momentum in volume and perhaps even in sales as well. CLSA, one of the brokerage, reports, is also sounding quite bullish in the real estate sector. Your thoughts on the demand? Have we seen an improvement in demand at the company level? Is there an increase in the kind of volume and the sales that you're generating?
My answer will be a vehement yes. There is a demand. The customer, it all, again, after having said yes, it depends on the location, the micro market, the overall product, the overall pricing. So there is interest in the customer, and now there's clarity also to the customer what their total cost will be. And I believe if anybody wants to buy, it's the right time to buy, because they're getting a great product at a very, very reasonable price. And this party is not going to last for too long. Ultimately, somebody has to make up. And I firmly believe that if somebody really has a need for a house and wants to invest, this is the right time, because in all the markets that we are working in, whether it's Bangalore or Hyderabad or even for that matter Kochi, Chennai, I think the pricing is still very muted, very reasonable, very sensible. And now the demand also is going up because there are three factors. First factor is RERA is giving the confidence.
Sure.
Secondly is now there is clarity on the GST. And the overall economic environment is also picking up. So
Mr. Razak,
then if there's a need for buying a house,
okay,
which always will.
Mr. Razak, I'm sure.
Yes,
I'm sure. People who are interested in this market are listening to you. And anyway, these have been the most resilient markets in the country. We just want to end by hopefully getting a sense of numbers. You were at about 4.66 million square feet at the end of 9 months. It's been a great year for you in terms of volumes. Where would you like to see yourself end the year? And purely in terms of volume growth, I know pricing is a function of too many things at this point in time, but volume growth for FY20, maybe some ballpark range that we can work with?
Yeah, we had given a guidance of about 3,500 crores sales for the year, which I am sure we will surpass. And we exceed that number. We've also done one plotted development in Hyderabad, which we've just launched. We got the RERA number only a week ago. And I'm happy to say that we are almost sold out in that plotted development. The development name is Nirvana, and that's done extremely well. So that's also going to add to the overall top line. So net, it's been a good FY19 for the company. We only need to now look at seeing how the next year pans out. The next year being an election year, we only hope that we get a strong government back again. That will help things.
Okay. All right, Mr. Razak. It's been a pleasure speaking with you, sir. Thank you very much for taking out the time. And let's hope the good times continue for the real estate sector and the allied industries as well, and for that part of the economy.